Hello, my dear students. I'm Mr. Arvind Prajapati, the director of Sanjeevani Group Tuition, which is situated at Naval. I hope you have seen my previous video, the journal entry part 1, and you have liked it too. Today, I'm going to start with the practical illustrations. So, let's move on to the learning part of private illustrations. Okay, today we are going to do practical illustrations. So, in the previous video, we have seen about what is classification of accounts, that are VL accounts, personal accounts, and nominal accounts. But we haven't done any practical illustrations about it. So I have put in this presentation. So we can go forward. So Mr. Rohit's capital. As the Rohit word is, therefore it is a personal account. You can see that. Then loose tools. Loose tools, is it a name of asset? Therefore it is a real account. Now what is drawing? Drawing is directly related to a person. Therefore it is a personal account. Then cartage. Cartage is nothing but the basically it is a tool. It is a tool used in a printers. It is a tool used in the printers, and it is a very minute things. That's why it is considered as an expense, and all expenses are nominal accounts. Then prepaid rent, personal account, as it represent to the directly person. Then copyright is an intangible asset, therefore it is a real account. Then patent is a real account, it is an intangible asset. Then outstanding income, it is a personal account because it is directly represented by any person. Then prepaid expenses, same, it is directly related to the person. Then commission received, it is directly, now commission received, it is not receivable. So commission is already received, that means it is an income, therefore it is a nominal account. Freight is a nominal account as freight is a normal expenses, that is carrying expenses. Then plant and machinery is a fixed asset, therefore it is a real account. Sundry income is an expense income, therefore it is a nominal account. Then livestock what it is, so basically जो भी गाय भैंस रहता है उसे हम लोग सब livestock में ऐड करते हैं, and as it is an asset, therefore it is a real account. Then good distributed as free samples, it is an expense that are called advertising expense. Radhika's account, personal account. Then outstanding wages is again a representative personal account. Then loss on sale of furniture, it is a loss means expenses. So Bank of Maharashtra, name of institution, therefore it's a personal account. Loan account is a personal account because it directly represented by a person. Then computer account, it is an asset. Then legal expenses is nominal account. Fixed deposit, real account, because it is an asset, it gives a certain income. Then income receivable, again receivable, outstanding, prepaid, advance, whatever is there, that are represented personal accounts. Then audit fees, nominal account. Trademark, real account, because it is an intangible asset. Loss by fire, it is a loss, again therefore it is a nominal account. Motor car, it is a name of asset. Income tax, now income tax department, so that's why it is a personal account. Then uske baad the GST account, it is an expenses. Then Siddhivinayak Trust, this is the name of an institution, name of a trust, therefore it is a personal account. Office equipment, real account. Stock of stationery, real account, because it is a name of asset. Indian Railways, it is the name of organization, therefore it's personal account. Income received in advance, again I said that previously, you can see the previous video. Dividend on investment in advance, that is nominal account. So dividend on investment advanced, that means we have already received that. Then discount account is an expense. Then Raj and Company, again name of company. Repairs account, name of expenses. Then royalty, it is a name of expenses. Now actual, we move to the practical illustration of the journal entries. So first transaction is here: purchase goods from Kajal worth rupees 2 lakh at 5% rate discount at 18% and half amount paid by check. Whenever you are doing the journal entry transaction, you just need to follow the steps. First step was that identify the parties. So what is the first party over here? purchase, then Kajal, then GST, then check. Why check? Because here check means bank is giving the payment. Okay. So therefore it is a party. So I again repeat, what do you mean by party? So it can be name of company, it can be name of person, it can be name of any expenses which is represented to a person, that it can be name of asset, it can be name of intangible asset or tangible asset, it can be name of any expenses, it can be name of any income. So whatever it may be, that are called parties. And in the previous video only I just explained what are cash discount and trade discount. You can just view for more details. Then next rule was classify the account. So purchase account is a nominal account, Kajal account is a personal account, then GST is a nominal account because it is an expenses. Then check, here we are receiving the check. The check is coming into our hand. Now we are purchasing goods. Now whatever the red lines are, that are debited by following the rules. So what are the rules? Now nominal account का rule क्या है? So debit all expenses and losses, credit all income and gains. So as purchase is an expenses, therefore purchase is debited and debited is referred as a red line. Okay. Kajal. Kajal is a name of person and we are purchasing from Kajal. Therefore, Kajal is giving. Therefore, what is the rule of personal account? Debit the receiver, credit the giver. So, Kajal is the giver. So, she will be credited. Then 18% GST it is an again expenses. So, it is an expenses. So, that's why it's debited. And debit is shown by red line. Then a check. Check means the check is going out from our, and again real account का rule क्या है? So debit what comes in, credit what goes out. Now check is going out, therefore it will be credited, and credit is shown by red line and debit is shown by red line and credit is shown by black line. So here we do the calculation. Purchase price. I have told you that if any transaction includes GST, so first calculate trade discount, deduct it from the final cost price. So after deducting 5% trade discount, we get 1,90,000. Next, next step is to add the GST. So 18% GST we have added 34,200. The final amount we get 2,24,200. Now here the half amount paid is in cash. So half is cash and baki remaining amount. So whatever the amount of purchase will be, so amount of purchase will be only and only 1,90,000 because we never ever mention the trade discount, the amount of trade discount separately. So here's the transaction. Purchase account debit, input CGST, input SGST. It is half. So 34,200 is divided between two amounts, that is input CGST and input SGST. Then to bank account, because cash is going out, check is going out, that is 1,12,100 and the balance remained 1,12,100. In this way we need to do all the transactions. Next transaction. Purchase shares of Mahindra company 60,000 and 1,000 paid as brokerage. So first rule, that is first step, identify the parties. Shares of Mahindra company, then 60,000, that means cash and brokerage. Okay, so why not purchase? Just because here we know what we are purchasing. We are purchasing shares of Mahindra company. If it is not known that what we are actually purchasing, if it is mentioned that purchase goods, goods is not a particular, it is not an identified goods. It is not an identified assets. It is not an identified element. That's why if we are purchasing goods, what type of goods we are purchasing? We don't know. That's why we mention purchase or sales. But if the name of goods is clearly mentioned, then we never ever purchase, never ever mention purchase or sales. Okay. So next, classification of accounts. So shares of Mahindra company is a real account because it is a main asset. Then 60,000 is again cash, and broker is an expense. Therefore it's a nominal account. Okay. Now next is apply the rules. So you tell me that shares is coming into the business or shares is going out. as we are purchasing, so shares is coming in or going out. So shares are coming into our company. That's why it is real and it is debited, because debit all comes what comes in and credit what goes out. Then again cash. We are purchasing the shares, so cash will go out. That's why it is credited. Then brokerage. Brokerage is an expense. So debit all expenses and credit all income and gains. So in this way, so all red lines consider represents debit and all black lines represent credit. So in this way we does the transaction. Shares of Mahindra company account debit, brokerage account debit, cash or bank account debit. Debit and credit amount should always be equal. Next. Most important transaction are people always do mistakes in such type of transactions. So be careful. Sold goods to Ravikant worth rupees 60,000 at 10% rate discount and at the rate 18% GST, one third amount received by cash at 5% cash discount. Now, identify the parties. Sold Ravikant, then 18% GST. Trade discount will not come just because we don't mention trade discount separately in the books of accounts. Then cash and then cash discount. Now here goods will never ever mention. Now here we are not able to understand what we are actually purchasing. That's why sold is mentioned over here. So now this is the identification of parties. Now next, classification of accounts. So sales. Sales is an income. That's why it's a nominal account. Ravikant is a name of person. Therefore it's a personal account. Then GST is an income over here. That's why it is a nominal account. Then cash is coming in. So it is a name of asset. That's why it is a real account. And cash discount is a name of expense or losses. That's why it is a nominal account. So here it comes. So here it comes the classification of accounts. Next rule, next step, that is apply the rules. Now sales. Now sales here it is an income. That's why it is sales here. It is an income. And what is the rule of nominal account? Debit all expenses and losses, credit all income and gains. So credit, Ravikant is the receiver. That's why he is debited. Then cash, cash is coming in. That's why it is debited. Cash discount, it is an income for us. It is an expense for us. That's why it is debited. And GST is an income for us. That's why it is credited. So how come GST is an income? GST is an extra charge which is charged by the seller. So here for the seller is getting certain GST, certain extra amount. That's why it is credited. Okay, apply the rules. Then this is the calculation how we do. So first sale price, then first step is to calculate trade discount and deduct it from the total amount. So after calculating 10% rate discount we get 6,000 and after deducting we get 54,000. So this is the first step. Second step is to calculate the GST amount. So 18% GST, which is 9,720. So after adding it we get the total amount. Then if cash discount is available, then find out how much cash is paid. So how much cash is paid? We have paid the cash, one third of the total amount. That means the cash discount will be calculated only on the amount which is paid in cash. That's why what amount is paid in cash? 21,240. So on that amount 5% cash discount will be calculated, which is 1062, and remaining after deducting 21240 minus 1062 we get as 20178. So this is the amount that he is going to pay actually in cash, and 1062 is the amount that he received as discount. He has given the discount and balance payment is still remaining, that 42,480. So here the transaction is Ravikant's account, that is the balance amount. Cash is only coming in of 20,178 and cash discount is in 1072. So all these were debited. Why debited? Because Ravikant is the receiver of the goods, cash is coming in, cash discount is an expense for us. Now sales is an income, that's why it is credited. Output CGST and output SGST are credited, that because it is an income. Next, Oh Lord. So, first step, paid college fees of proprietor's son. Now, proprietor's son. In the books of accounts, there are no, if I'm paying for my own things, so all that personal things are called drawings. So that's why here we do as drawings is an drawing is the receiver. That means we are taking out cash. That's why cash is going out, and drawings is normally an expense for us, for a company. That's why it is debited. Next. Okay. Purchased computer of 50,000 at the rate of 18% GST. So what here it is? First step, identify the parties. So computer 50,000 and GST. Purchase will not be there just because we know what we are purchasing. Next. So computer is a real account, cash is a real account, and 18% GST is a nominal account. Now apply the rules. So what are the rules? Computer is coming in, that's why it is debited. Cash is going out, that's why it is credited. And GST is an expense at the time of purchase and income at the time of sales. Don't even don't ever forget. So this is the way, this is the transaction. Next. Paid transport charges on the above computer of 2000. See what we have purchased in the about transaction. What we have purchased, so computer we have purchased. And again on the 15th of April, we have paid the computer charges for transporting it. What you are transporting? Computer. Which computer? The new computer. So if we it's a human mentality. Whenever we are taking, for example, you are bringing the refrigerator from the showroom to your home, and it is costing around 5,000 of traveling, and the refrigerator itself costs 12,000. So you tell the public that the cost was only 16,000, but you know that cost was 12,000. Then why you are telling that it is 16,000? Just because it is a human mentality that I have paid something extra to it. So why not add it? So anything that we do on the installation at the time of purchase, a new machinery, a new gadget, whatever we pay at that time for that installation, all that expenses are included in that. Okay, so here computer, this 2000 will be added to the computer account and not separately. So here the parties are computer and cash, and computer is a real account, cash is going out, therefore it is a real account. So here goes the transition. Okay. If here it was paid transport charges of rupees 2000, then we will set that transport charges is a party and cash is another party. That's it. Next. Paid salary 15,000. So salary one party, 15,000 other party. Salary is a nominal account. 15,000 is a cash. It is a real account. So salary is an expense. That's why it is debited. And cash is going out. That's why it is. Paid rent 5,000 and advertisement 15,000. So first identify the parties, that is rent, advertisement and cash. So rent is then second step, classification of accounts. Rent is a nominal account, advertisement is a nominal account, and cash is a real account. So apply the rules. Rent is an expense, that's why it is debited, that's why it is mentioned with red line. Advertisement is again, it is an expense for the firm, that's why it is represented by red line. Red line means debited. And real account, so it is going out, cash is going out, that's why it is credited. Debit what comes in, credit what goes out. Here the entry, rent account debit, advertisement account debit to cash account. So in this way we have paid rent for 5,000 and 15,000 for advertisement. So total we have paid 20,000. So credit amount will go 20,000. Always remember that debit and credit amount should be equal. Okay, next. Sold goods to Salman 20,000 at 18% GST. So first classification of accounts, that is identify the parties. So sold Salman and 18% GST. Here cash is not there just because there is the name of person. Okay. Now next. So this is sales. Sales is a nominal account. Salman is a name of person, that's why it is a personal account. Then 18% GST is a nominal account. So sales is an income, that's why it is credited. Personal account, Salman is the receiver, that's why it is debited. 18% GST at the time of sales. GST is an income and income is always credited. At the time of purchase, GST is an expense, that's why it will be debited. Okay, this is sales, that's why it is credited because it is an income. So Salman's account debit to sales to output CGST and output SGST. Next, purchase goods for 1 lakh at the rate of 12% GST and paid by check. So wherever check amount is there, check word is there, you should always remember that there the word will arise, that is bank account. The account will be created as bank account. Don't ever forget. So identify the parties, purchase, then GST and check. If there was no word uh, written as check, then we have considered as cash. That is 1 lakh. Okay. So purchase is an expense. That's why it is a nominal account. GST is an expense. That's why it is a nominal account. Check, that means real account because it is a cash. Then purchase, it is an expense. That's why it is debited. GST is an expense, that's why it is debited, and check, that is cash is going out, check is going out, that's why it is credited. In this way, we do the entry. And the last transaction, but not the least, wages outstanding. First, identify the parties, that is wages, and another one is wages outstanding. Okay, now tell me what is outstanding wages, which party it is. So it is a personal account. Wages is an expense, so it is a nominal account. And outstanding, it is always outstanding by a person, that's why it is a personal account. So what is the actually entry? So wages is an expense, so it is debited, and wages is outstanding, it is a credit because it is still pending. You are still going to pay whatever we are going to pay, that is a liability, and all liability have always a credit balance. Okay.
Thanks for watching, my dear students. I hope you have understood all the concepts which I have considered. My next video will be on the new topic named as ledger. So please like, share and subscribe and click on the bell icon to get notified whenever we upload a new video. Also, if you comes up with any doubt, so just comment down in the comment section. And if you want to know anything in detail, so my contact details have been given. You can contact me personally. Thank you.